We are back with a new video. I wanted to update you on where things stand with, something that's really important, even though everybody in the market, the talking heads, are poo-pooing it. And also in the banking sector, which, wow, look at those. They have had bang up earnings. Isn't this all fabulous? Nothing to see here, kids, just move along. So let's talk about this, because we now have the longest bond market inversion in history. What is that? That was the old one, and let's see, what was that in? Oh, that was in the 70s going into the very early 80s. Well, guess what? Today, we have a longer bond market inversion than we ever have, even during the 70s, when we were transitioning into a new system. And guess what? We're transitioning into a new system right now too. So what does a bond market inversion, as a reminder? It means that the shorter term rates, the 2-year notes, are higher than the longer term rates. So it makes more sense to think short term versus long term, right? That is an anomaly. You can see the other places where it hit back in prior to the crisis in 90, back in 99, here we go, 2008, but look at this now. This is serious. They want us to think that this doesn't mean anything anymore, though I believe that because this is the longest bond inversion in history, and we are transitioning into a brand new financial system, that's what that is telling us, and that there is a crisis ahead. Is this a warning of a U.S. and a global hyperinflationary depression? Because what do they have, right? All they have is money printing and more debt. But there is a structural shift that's happening in what supports a currency? The full faith and credit of a government. Think about that. As long as you trust them, you have that confidence, you have faith, and then you will extend them credit, which means loan them money. But we've already been witnessing that central banks are buying back and monetizing the debt of government. So this is not a new structural shift. This is one that's been in the making for a long time. And so I gotta tell you, warning, warning, warning. This means something. This means a lot. And yes, I believe we are headed into a hyperinflationary depression. But hey, here's the bank's expenses. Now we do know that every single one of them passed the Fed's stress test, which of course is garbage. We don't even know how they come up with some of those numbers. Even the banks that they're judging don't know this. So I think that's pretty interesting. But what kind of unique forms of inflation might they be talking about in this article? Well, 3 of the largest lenders laid out an updated 2024 cost targets on Friday that were almost $4 billion higher than at the start of the year, and we're just through the first half. Among the culprits, I love this, are regulatory fines, cost to fix past mistakes for customers, and higher charges to pay for last year's bank failures. So this form of inflation, which we've talked about before, has just become a cost of doing business for the banks. They do what they want. The big become bigger. They wield a whole lot more power. Most of their income is generated from trading, which, in Dodd-Frank, they weren't supposed to be doing any proprietary trading anymore. I'm telling you, you better be in a position to weather this storm. You need to be as self-sufficient and independent as possible with food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done. Because what are the banks doing since they all passed the stress test? Well, what's JP Morgan doing? Well, they are intending to increase the quarterly dividend and expand to a new share repurchase program. And that great? How about Goldman, who was kind of iffy? They did pass, but they're questioning and challenging the results, which I think is interesting. But don't worry, because they passed, they're going to increase those dividends. So is Morgan Stanley. They're going to increase their dividends, and they're going to do a multi-year buyback program. They're going to reauthorize that up to $20 billion. Woohoo! And Citi? Well, they're too going to increase their quarterly dividend and continue to assess on a quarter-to-quarter basis their share buyback, their share repurchases. And Bank of America? Oh my, shockingly, they too raised their dividend, as did Wells Fargo, a repeat offender, and probably having a little bit more of that unique inflation than any of the other banks, but maybe not. I mean, it's all relative to size. But what does all of this mean? It means that once that money leaves that system, it is not there in this next crisis. This is wealth transfer 101. The Dodd-Frank Act was about regaining your confidence, because if you lose, or I should say, when you lose confidence in the banking system, you're done, right? Once you lose confidence, it is so hard to regain. That's why I pay so much attention to what's happening in Zimbabwe, because they are attempting to use gold to bring back that confidence. But unless it's convertible, it's not working so well. But we'll keep an eye on it, because, one thing they knew when they created the system is that people marry the legal money of the state. So you think this has value and you're willing to work for it, save it, and use it as a tool of barter. But the reality is banks are sending those dollars out of the system, leaving you on the hook, because as the industry continues to consolidate, then there's more and more power and risk in fewer and fewer players. You better become your own central banker, and this is how you do it. People want to know, well, how do I become my own central bank? You do what they're doing for themselves, which is they're buying gold at a faster pace than they ever have in history, because they know that we've already begun this transition. Actually, that started back in 2008. We've begun the transition into the new system. How ready are you for it? Yeah, better get ready, because it's coming whether you want it or not, whether you pay attention to it or not. And how horrible is it to own physical gold and silver, especially considering that gold is now entering a new bull market in terms of the spot chart, but it's been in that new bull market according to the physical only charts. Don't you want to participate in that, to protect your wealth, to put you in a position to sustain your standard of living and grow your wealth base and your income base? That's what we want. So just make sure that you give us a like, leave us a comment, share. Send your questions to questions@LynetteZang.com, and make sure that you come to the live events every Tuesday at noon Mountain Central Time. And I think right now it's the same time on Pacific Time. Bring all your questions, and make sure that you also watch another, I look around the world. I think being global is so important these days. And one of my very favorite places is Australia. I mean, the people there are beyond phenomenal. And so is the coffee and the pastries and the food. And it's just the most wonderful, warm, loving country. But they are also showing the rest of the world how they're moving forward to take more control over their population. We got to pay attention to all of this. We got to come together on a global basis and vote no, and have that quiet and peaceful revolution. Because 100%, I know. One person, what can I do? I'm one person. Well, I can't do that much as one person, but when we all come together in community, boy, oh boy, what we're seeing around the world is that's where the power is. Let's take back our power. And until next we meet, please be safe out there.